For the last 3 weeks, gold has been moving quite hectically, and everyone is asking what's next, what to expect from gold. So here it is. Let's talk about gold. Let's see where the market could go, not only technically, but fundamentally as well. Before we get in, there are two parts. We're going to start with technicals, opening charts and seeing the structure and where the price could go, react and support some levels. And the second part is the biggest part. In upcoming 30 days, there are a lot of important events that you should pay attention to. So let's get into it. Let's open the weekly time frame and let's see what's up in there. We can see that in the weekly time frame, there was this weekly imbalance being made after the US and Iran started their conflict. After that, price bought inside of it, reacted beautifully from equilibrium and made a next impulse to the downside, making new lower lows in 2026. And zooming in into a daily time frame, we can see that the whole summer was going downside and then consolidating, and now by the end of the summer we can see a really nice breakout from the consolidation and a 14% move into the weekly imbalance, which is 57,000 points or 5.7 thousand pips. Huge move, a really huge move. Right now, the key resistance levels that I'm going to watch out for is this 791 Fibol level, which is drawn out from this whole move to the downside, from this weekly imbalance. And right now, gold is approaching this level, and a reaction from this deep retracement could just be a healthy correction, possibly fulfilling this inefficiency or this daily inefficiency that played a role as a resistance level, and then possibly maybe these lows. But if the price comes into these lows, I will be careful to look out for a sweep of these lows right here, but this could be a huge swing if the price comes down into this level. So about the resistance levels, for me, the biggest attention is at this equilibrium of this weekly imbalance. After that, this level 1, which were these highs right here. If this gets flipped up, I will look for all-time highs, momentum trade, swing trade, and continuation to the upside. If this weekly imbalance will get rejected, I will look for a really nice retracement into these levels to fulfill the inefficiencies, and then I will look for possible reactions from there. Either it's the change in state of delivery model, or it's just a purely equilibrium from any gap, or anything, Fibol levels, anything. Just a retrace into a key levels, and then I want to see buyers stepping in. And then I'm just gonna be this fast into a positions, and I'm going to be super early. So, and if you don't want to miss any setups that we take with Rocket Trading Club, you can check the first link in bio. Right now we have a 50% discount of a lifetime access. Pay once and enjoy forever. We have some members that joined 2 years ago, and they are joining even today on a live trading session. So we have 2 live trading sessions per day. We are live streaming London session and New York session, and we are giving out all the daily analysis, all the setups that we are looking for, and you have a really nice community on your side. So the first link in bio, check it out and see you there. On the finishing note about the technicals, drawing out how the trend is moving, we can clearly see the trend is super extended and super bullish. So my attention is for longs, but if there's going to be any resistance levels, any reaction zones, or any signs that price wants to have a correction, maybe it's going to be intraday shorts, maybe scalp shorts, but I would love to see a retracement and then concept for a long setup. But this was only a technical setups. Let's go into fundamentals, because that will make the most sense about where the price wants to go. In the next 30 days, there are 7 dates that will bring some volatility into the markets without any questions asked. And the first one is today, 24th of August, today Monday. There is a Treasury Secretary Bessent speaking. If there's anything that he says about hiking rates or cutting rates, that will move the markets drastically. Going into the 4th of September, which is the first Friday of September, there are NFP news. And if you don't know how the NFP news work, or so-called non-farm payrolls, it's basically how much new jobs are added in the US economy. If the number comes lower, then it's bullish for gold and bearish for dollar, and quite opposite. If there's more jobs, then DXY is going to be bullish and gold is going to be bearish. And gold tends to make huge moves on this date. So pay attention to 4th of September. Then we have September 10th, Thursday, ECB rate decision. It's less direct to the markets, but if euro strengthens or weakens, it could move the dollar index as well, which could move every other asset as well. So need to pay attention to this one as well. On September 11th, on Friday, we have US CPI data, which is the inflation data. It will be really interesting how it comes out. But for now, no predictions on it, just watching and waiting how the data will come out, because at these events, patience will pay. On September 16, which is the biggest day of the September, it is federal funds rate, or so-called FOMC projections on how the US will come out with the bank rates. Right now, there is a big rumors that there's going to be rate hikes, which isn't bullish for gold, it's bullish for Dixie. If everything stays neutral, it's nice, markets could breathe and continue the move that they are right now doing. And the next day, which is 17th of September, in the UK, we will see the same thing, bank rates. It's not such a big deal, but still, this is a huge part of economy, and this could move markets if the data will come out significantly different. And then this is the one that I'm paying the biggest attention to for the whole September. It's 18th of September, Friday, BOJ policy rates, or Bank of Japan policy rates. If somebody doesn't know, I will try to be super short with it. Japan has been holding their policy rates really close to zero. And what does that mean? You can take money from the bank and you don't have any interest on the money. So basically you can borrow money and you don't need to pay any interest on the money. And right now as we speak, Japanese yen is sitting at the lowest point since 1990s. And Bank of Japan is stepping in to save their currency. And what we can expect from Bank of Japan with the policy rates is a hike. And if there's going to be a hike in Bank of Japan, then there's going to be a little bit of a strengthening in Japanese yen. So putting everything together, right now I'm paying the biggest attention to the 791 level of Fibo, then all of these highs that I have marked out into this weekly imbalance and equilibrium of this weekly imbalance. Right now, I'm treating markets as safe as I possibly can, trading intraday, quick trades with a really safe risk and money management until the noise of NFP and FOMC will fade. And after these news, there's going to be a clear direction and we are going to take action on the markets with a little bit of a bigger risk because we know the direction, we know the data, and we know how the economy wants to move. That's my read, and this is not a financial advice. This is just a guy sitting in a room and looking at the charts and trying to understand the markets, economy, fundamentals, and technicals. Let's see how the NFP news will come out, how FOMC will come out, how BOJ policy rate will come out. But until then, be safe, stay safe, don't overtrade. And again, there is going to be better days in trading. See you soon.